This is the lowest price that PepsiCo has traded at in over 3 years. They pay a consistent dividend, and you can pick up some right now for a really good price. PepsiCo operates in over 200 countries and owns many brands other than Pepsi, such as Lay's, Gatorade, Quaker Oats, and Tropicana. With a market cap of around $250 billion, this is one of the largest consumer goods companies globally, offering stability and dependable returns with its dividend payout. Recently, the Federal Trade Commission filed a lawsuit against PepsiCo, alleging that they were providing preferential treatment to Walmart, which may have led to higher prices for other consumers. PepsiCo has denied this, stating that their practices are standard within the industry. This lawsuit highlights concerns about large companies potentially giving unfair advantages to big retailers, which can make it harder for smaller stores to compete and may lead to higher prices for consumers. The outcome of this case could influence how companies offer discounts and promotions in the future, aiming to ensure fair competition and pricing for all shoppers. Inflationary pressures have influenced consumer spending habits, leading to a slowdown in snack sales.
Stock has already underperformed the market. And I think part of the reason why the stock has reversed this morning is largely what happened. Pepsi's results was more or less priced into the stock. We could see the data all summer. Frito started mid-June to mid-July with a recovery, and then it tailed off over the course of the rest of the summer. And same with the data that you could see in Quaker and in the beverage business.
PepsiCo's Frito-Lay division reported its weakest sales in 4 years as consumers reduced discretionary spending.
So it's not that consumers aren't buying food and beverages anymore, but they're really scrutinizing whether they need or are buying things that were maybe off the list when they walked into the store.
PepsiCo has a strong history of dividend payments, consistently rewarding shareholders over the years. As of January 2025, PepsiCo's trailing 12-month dividend payout is $5.42 per share. The current dividend yield stands at approximately 3.66%. PepsiCo has demonstrated a commitment to increasing their dividends over time, with a 7.79% growth in dividends over the past year. In the third quarter of 2024, PepsiCo reported a revenue growth of 0.6%, a significant slowdown compared to the 6.7% increase in the same quarter the previous year. This deceleration was partly due to product recalls, which negatively impacted sales and profits. Analysts expect revenue to grow 5 to 7% annually in the next 3 years, driven by emerging markets and healthier product lines. This company will continue to have a global presence and will recover after the lawsuit.
PepsiCo has been doing much to make its product lineup healthier. They've taken a lot of salt out. They've taken going more natural colors. And just as RFK Jr. is going after Fruit Loops, I think that Ramon LaGuarta is positioning his portfolio to be able to say, look, we are doing what we can. And they added chips, by the way, for people who think that there's not a lot of value. They're fighting shrinkflation. And I just think he's being very forward. This acquisition shows me that not everybody is going the wrong direction.
PepsiCo's ownership is highly diversified. Institutional investors own about 73% of the company, which includes major players like Vanguard and BlackRock. Retail investors and insiders hold the remainder. This broad ownership base reduces the risk of sudden price swings due to insider moves. The massive food and beverage market is worth trillions globally. With leading brands like Pepsi, Lay's, Quaker, and Gatorade, the company's endgame market size is virtually unlimited as long as global population and consumption trends continue to grow. The rise of health-conscious consumers has created new opportunities in low-sugar drinks and snacks. PepsiCo generated over $90 billion in 2023, up from $86 billion in 2022. This reflects steady growth driven by pricing strategies and increased demand for snacks. Net income in 2023 was approximately $10 billion compared to $9.3 billion in 2022. PepsiCo has a price-to-sales ratio of 2.2, which is relatively close to the industry peers, and a price-to-earnings ratio of about 25, also aligning with other large consumer goods companies. The price-to-earnings growth ratio is 2.3, which is higher than some competitors like Coca-Cola, indicating investors are paying more for the projected growth. The price-to-book ratio is 13.5, which is higher than the industry average. PepsiCo's largest competitors are Coca-Cola, Nestle, and Keurig Dr. Pepper. What sets PepsiCo apart is its diversified portfolio of snacks, beverages, and nutrition-focused products, This differentiates them from companies like Coca-Cola, which is primarily beverage focused.
We need to continue to innovate because the consumer is ready to pay for more when you offer functionality, when you offer convenience, when you offer health and wellness opportunities. So we're playing on both. And that we're optimistic. We think that as a company, we've always been good at evolving our portfolio, evolving our marketing practices, and that will do well for us.
You mentioned that
PepsiCo has a total assets of just over $100 billion, with $45 billion in debt. Their debt-to-equity ratio is about 2.1, which is higher than the industry average, but manageable due to their stable cash flows. PepsiCo is seen as a reliable blue-chip investment with low risk. The biggest challenges are health trends against sugary drinks and processed snacks.
The Trump administration is going to be pro-growth. It's going to, help consumers feel better. I think consumer confidence is a factor, and also for us as companies, deregulation will help us. Hopefully, there's a reduction of taxes, and as well that would help us, operate more efficiently in the U.S. And the U.S. is a critical market for us, and everything that happens in the U.S. impacts PepsiCo at a grand.
PepsiCo is investing in healthier options and promoting sustainability to align with regulations and consumer expectations. PepsiCo is suited for long-term investors seeking steady growth and dividends. Its diversified business model and strong global presence make it a cornerstone stock.